What's up everybody? Nate here. Well, as if things couldn't get any crazier in our world right now, China just announced that parts of the country are going back on economic lockdown, which means more social distancing, more closed businesses, and even crazier supply chains here in the United States. And with everything else going on in the world right now between Russia and Ukraine, and our own economic problems with inflation, it looks like the possibility for us adding a whole nother layer to that is getting bigger. Even though it looked like we were just about to get out of the pandemic. Come on, 2022, leave us alone. With these brand new partial economic lockdowns coming out of China right now, I wanted to take a minute to talk about everything that this is going to mean for our world economy and our economy here at home. Because it finally looked like the United States and the rest of the world was starting to recover from the pandemic. However, with more economic lockdowns coming out of China, that recovery might need to take a back seat. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below, and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. Now let's talk all about what exactly is happening in China right now and how that might affect prices here in the United States. So right now, China is having one of its worst outbreaks in virus cases that it's seen in over 2 years, pretty much since the pandemic actually started. One of the most important tech hubs in the entire country recently reported around 66 new virus cases. It's going on a week-long lockdown. Shanghai, the business center of China, is also putting in new restrictions based on the virus. They're closing down schools, they're completely closing down movie theaters, and they're starting to restrict travel in and out of the city. And this has already immediately hurt American companies, as one of Apple's biggest suppliers, Foxconn, was forced to completely shut down its production in China. And right now, it is completely up in the air when that factory is gonna reopen. Well, immediately, why exactly is this a big deal? Well, first and foremost, travel between China and the United States is relatively open right now, which means that there is a potential, if we see new virus cases spike and new variants come from China, that those could be brought over here into the United States. Obviously, that's a big deal because now the United States might be facing more economic lockdowns and social distancing measures. The US hasn't had a lot of virus cases recently, as numbers have continually gone down since the start of 2022, but that could start to change, which could also make policy in the United States change as well. And even if the United States doesn't go through full-blown economic lockdowns, you're gonna still see a lot of businesses and people in general do some personal restrictions. Businesses are gonna have to continue to provide extra cleaning and shortened store hours so that they can clean and sanitize their locations. Individuals are not gonna wanna go out and shop pretty much anywhere if there is an outbreak in cases. That is gonna hurt businesses' bottom lines, which affects profits and revenue for all of these big companies. This is exactly what we saw during the early parts of the pandemic. Businesses shut down, and that was a big problem for everyday consumers because now their job might have been closing too. They have to stay home, which also meant they weren't going to be getting a paycheck. If they're not getting paid, then businesses aren't getting paid either, which means now nobody has money and no money is circulating throughout our economy. That is when the United States federal government and the Federal Reserve decided to step in and give out a whole bunch of economic stimulus. That led to supply chain issues and high inflation, and you can pretty much see where we are today by going to the grocery store and looking at the prices. A whole lot has changed since back then. We now have vaccines, and we've kind of learned a lot more about this virus over the last 2 years. However, it's still spreading rapidly, and that could mean similar measures are taken in the United States. So obviously that's bad for businesses and then the stock market, because if all of these companies are losing a ton of money, well, then people aren't going to exactly want to invest in stocks that are having terrible earnings reports. And our economy here at home is already super fragile because of inflation. In fact, in February 2022, inflation hit a near over 40-year high of around 7.9%. That is the highest that we've seen since January 1982. And I don't know about you, but some things really need to be left in the 80s. That in itself is going to make consumers spend less money because the price of everything in our economy is going up, and it's going up super rapidly right now. But then things get even more complicated when you talk about what exactly comes from China that the United States gets. Our businesses and our country does a ton of trading with China. Well, if the pandemic gets even worse in China, then that could mean that the supply lines and our supply chains that come to the United States also get halted, meaning another sharp sharp and rapid increase in prices. But it's not just the supply chains, it's some other things that China produces that we use just about every single day. The war between Russia and Ukraine right now has meant that prices pretty much all throughout the world for natural gas, oil, wheat, and some precious metals have gone through the roof. Oil, for instance, has gone from around $80 to $90 a barrel to well over $130 a barrel in just over 2 weeks. Nickel hit a new all-time high of around $100,000 per ton last week, and wheat prices are also setting all-time highs. This is because Russia is one of the primary producers of all of those things. And because of our economic sanctions on Russia and the war in general, it's been really difficult for the United States to get those materials, which means anything that is related to those resources and industries is pretty much going to go up in price. Now, how exactly does China fit into that? Well, China is also a huge producer of a lot of goods and services that the United States uses. They also produce a ton of wheat. Of course, wheat is a primary ingredient for bread, but it's also used in a lot of other things, like snack foods, pasta, and even some sauces. So if China starts seeing a lot more virus cases, and then they have to impose even harsher economic lockdowns, then you could see the price of wheat and wheat-related items skyrocket in the United States. Now, with all that being said, is there anything the United States can do to kind of combat all of these high prices and inflation? Well, what we can actually do about inflation and high prices in the United States is getting super complicated. Inflation simply means that your monetary supply is increasing. So the United States federal government over the last 2 years has printed a ton of money through economic stimulus and huge bills that pass through Congress. When that money is printed, the United States doesn't just sit on it. It's because it's funding certain programs or they're giving it back to citizens. The whole idea here is that it then circulates throughout our economy. So it's given to consumers who then spend it at businesses. Businesses can then grow by hiring more workers, opening more factories, and the like. And we've had inflation in the United States pretty much every single year since we were founded. I will say there has been periods of negative inflation, but this is extremely rare. It's more likely that we'll continue to see inflation in the future. This is because when the United States prints money, there is a need for it. So you're expanding your economy because you're printing more money. Then more people have it, so they have more to spend. However, as people get more money and they spend more, that signals to businesses that they need to produce more. And in order to produce more, they have to have even more money. That allows them to meet demand, because if they don't, then our shelves would be running out every single day. We tried to solve the pandemic problem by throwing trillions of dollars at it. I mean, in 2020, the United States was in a recession because of all of the economic lockdowns and social distancing orders. Nobody was going out and doing anything, and businesses were shut down for a long time. After things started to open up again and lockdowns pretty much went away, our economy recovered faster than it ever has in American history. But the bigger issue is all of that money is already out there. It's either in people's bank accounts or businesses have a hold of it. You can't exactly take it away now. So because there is all of this additional money in our economy, that creates demand. Now you have millions of Americans who are able to go out and spend a lot of money, leading to high prices and partially contributing to the fact that we have supply chain issues. We're just not able to get all of the things onto shelves fast enough for Americans. So we can't really do anything about all of that money that has been printed, but we can reduce demand in our economy. This is one of the powers of the Federal Reserve. When the pandemic started back in March of 2020, they effectively lowered their benchmark interest rates all the way down to 0%. It was super easy for anyone to go out and spend money or get a loan. You were basically going to save hundreds of thousands of dollars over the lifetime of your loan and hundreds of dollars a month. That enticed people to spend, because if people stop spending, then our economy doesn't grow. If people go out and spend their money, well, now everything continues as normal, even if nobody is working. All they need is money. Lowering their interest rates created some problems for our economy. You saw the housing market explode. You saw the asset market also explode because inflation was getting higher. Prices were out of control, so assets like stocks, bonds, gold, Bitcoin, and real estate also exploded in price. And now the Federal Reserve wants to do the opposite. They want to raise their benchmark interest rates and eliminate that demand in our economy. Except for it's a little more complicated than that. You see, the Federal Reserve has the power to raise and lower its interest rates, which creates or eliminates demand. That will stop people from spending so much money in our country. However, if the problems aren't really with the United States and our own monetary system, then raising interest rates isn't really gonna help. In fact, it could seriously hurt our economy because now you have higher interest rates and inflation is still going to go up at the same pace because of outside factors. We're starting to see this right now with the Ukraine-Russia war. Because of all the things that are produced in Russia and that they can't come over here to the United States, well, the prices in certain industries are going up. If China was to effectively go into a bigger lockdown, then you'd have the same supply chain issues, except for they'd be coming from China now. All of those industries and their shipping will have a way harder time getting to the United States, which means you're going to have a shortage. And this could end up being a food shortage that a lot of experts and investors are worried about. Not necessarily a widespread food shortage in the United States, but we're talking the other parts of the world here, particularly China. At the same time though, the Federal Reserve can't exactly do nothing because they have to lower demand in our economy. I mean, Federal Reserve Chairman Jerome Powell has pretty much already come out and said that the Fed is raising its rates no matter what. And that's because demand is so high right now. Lowering it will bring down inflation in our economy. However, they have to be very careful about how far they lower it. And the United States and the Federal Reserve has to be careful and keep an eye on supply chains. Now, there's not really much they can do to influence supply chains in our country or abroad. I mean, they can't exactly tell Chinese companies to hurry up with the shipping or American companies to produce more. It's not exactly how it works. Businesses will continue to produce goods and services at a rate that makes sense for them. They simply cannot meet demand because of all of the widespread lockdowns in China. They're not able to get their goods and services over here. Now, here's exactly what all of that means. Because economies all throughout the world are connected in one way or another, something that happens on the other side of the planet is going to affect us. We don't actually know yet how these lockdowns in China are going to affect us right now, but you can expect supply chains to get hit, which means inflation is going to continue to rise. As all of that kind of happens, you can expect that consumers are going to want to spend less money. And not only are they going to want to spend less money because the price of everything is going up, even if they do go to stores, the things that they want in the shelves might be empty. That means if wages and income in the United States do increase a little bit more to give consumers more money to spend, well, they might not be able to buy anything because shelves are empty. That is called stagflation. You have inflation going way up, and then you have your economy going way down. It's a big problem because it's not that consumers don't want to spend, it's that they can't. And those are all issues that are happening outside of the United States. Expect the Federal Reserve to raise their benchmark interest rates and expect them to pull all of their stimulus. Before, they were arguably the cause of all of this inflation, but they don't want to continue to see it get out of control. They're going to do what they can without sending our economy into a recession. But in doing so, that will most likely mean that inflation continues to rise. Many experts and investors expect inflation to go back down at some point. However, that point might not be anytime soon. And it's just a reminder that our world is way more complicated than it seems because of the war between Russia and Ukraine and now a potential outbreak in virus cases in China that completely complicates our recovery. By exactly how much? Well, that's what we're waiting to see right now. But now I want to hear from you on this issue. What do you think about China going back into economic lockdowns because of the pandemic? Do you think this lockdown will be short-lived and won't have many, if at all, effects on the United States? Or do you think this is a start of a bigger problem that's only going to hurt our economy here at home? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world 7 days a week, I'm putting out uploads on this channel every single day, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.